in the previous 2 weeks on gold and silver. They flashed down pretty hard. Now we're kind of trading sideways. We're trapped in a range on both at the moment, although I believe that both the ranges will be broken back out to the upside.
Do you think it's possible that we might retrace $1,500 like we did back in 2012?
No, I don't think so at all, because of the fact that the dynamics have changed, where there's more. They're coming up with, the Federal Reserve and other central banks are coming up with more creative strategies to apply more money in the markets. I mean, it's like one of the first times in history that I know of that, the federal government literally just sent people checks, all over, and they didn't really verify what was going on. That money is going to be hard to, expunge back out of the market. I know they've got reverse repo windows. They're providing all this liquidity and lendings out there. But I just think that, they're not going to get the recovery. It's they want it too perfect. We want inflation at this level and we want, jobs at this level. Well, the jobs market is pretty broken. There's a lot of people that are not going back to work ever. There's a lot of pushback on it. You're seeing concessions being made for work at home and things like that. And I just feel like, that's going to have a longer lasting effect than what they anticipate. And as a result of that, they're not going to get the recovery that they need. So they're going to end up only being one interest rate hike, maybe doing some tapering, but the tapering won't be as aggressive as what they think. That's where people are concerned about the growth recovery in U.S. equities will most likely dive. And then we go into more of a, like I said, a stagflation period. That's where gold tends to perform its best.
Yeah, these macro forces that you talked about, monetary policy, and of course the stimulus checks that you mentioned, these should have been very supportive for the gold price over the last couple of months. Yet, of course, as you've seen, it's been flat. How would you summarize the gold action in the last, I would say, 4 to 6 months or so? Why do you think gold has not yet broken out when maybe it should have already?
Well, because of the rising yield environment. So you'll have when yields are at zero and gold yields zero, you tend to have people that shift into gold and they hold it because it has more of a chance of bounce back recovery. So they acted as a trading vehicle once they realized that yields were rising. People that are not interested in gold for any other reason except this safe haven, it's got some store of value there. They're selling that position off. They're chasing treasuries and treasury yields going back into U.S. equities. So if you look at gold, it's down 6% year to date. Silver's down 1%. It totally reflects in the macro themes environment. And then once the macro theme changes, you'll see gold will retrace it and it goes into a seasonal rally towards the end of the year anyways. So I believe that, again, I think that equities will top. We were putting on some bearish put spreads on U.S. equities. We pared back some of our positioning there. We pared back a lot of our Bitcoin holdings, and we are going longer term with some of these bounce back plays like, again, gold, silver. Remember, gold and silver, they're a similar set. They tend to move together. And what we're looking at is the upside on that.
First of all, this trend is happening worldwide. It's not just India. And second, India is important because it's a very big market for physical gold. So what's the thesis here, Phil? Do you think that suppose they potentially, if they shift back into gold, would that provide a boost?
That would be huge. I mean, I would want to monitor how India and how they're perceiving some of these cryptocurrencies, like how China's done crackdowns on cryptocurrencies. We've seen the price of Bitcoin get cut in half. Many of the smaller cryptos cut in half. If India does take that kind of direction and they start shifting back into gold and silver, some of their more traditional holdings, you could see big boosts, especially in their central bank holdings, and that would push prices back higher.
Do you think the younger generation of India might not be as accustomed to buying gold and silver as their parents did? And if that's the case, then 20, 30 years down the line, when they have kids of their own, they might not be buying as much gold, physical jewelry, bars and coins as the previous generation, which would significantly dampen the jewelry demand in the country.
They tend to, so in all these market boom and busts, like back, you look at 2000 era, everyone was a day trader in technology stocks. That had blown up, and then they shifted back into more traditional assets. Traditional assets tend to perform over long periods of time. You have smaller periods where you can capture these dramatic gains, but I really think that, someone needs to have a diversified portfolio. You can't just hold one or the other. And still, I believe that you can get multiple times your money on a product like silver rather than, Bitcoin is facing.
Do you think it's significant enough to push gold prices up, even if everything rushes back into gold jewelry?
Sure, it could make a substantial impact on it, and you look at, I mean, it's not only just gold, but it's also, silver is that poor man's gold, and they tend to target that as well. And we could really see that we could see that have more of a true, where they're shifting out of cryptocurrencies going into silver's actual uses are continuing to grow. So if you get all of a sudden India selling cryptos going into gold, then realizing that gold prices are historically high, they may look at silver, which is historically low, and start adding some of these holdings. And that's where you can see prices start to trend higher. Like, I truly believe that you're going to see silver, where the floor is going to be $28 and will be averaging 32, 33, 34 into next year. And I believe that gold is going to continue to maintain these elevated levels. It's just they naturally price band higher as time goes on, and the corrections are getting shallower. They're violent, they fall quickly because of volatility spikes, but they're quickly swallowed back up. That's why we were putting on these long-term strategies at these lower levels here, and we want to ride it out to capture that next move higher. 2650 on the upside, 2550 on the downside. But you look at some of the base metals, they're starting to recover, and I think that silver will break back out to the upside. And another market that we've been all over, I've written on Kitco, was the oil markets. Since November, that was a great recovery play. Now I think there might be some concerns that OPEC is going to increase production, and the Delta variant could play a role with increased lockdowns. You're going to see, kind of peak demand at the moment. So we are paring back some of our oil positions as well.
Okay, and finally, now you mentioned a seasonal rally towards the end of the year for gold. You're looking at $2,000, correct?
I really believe it could get going again. 2000 would definitely capture some headlines on the upside. I think that it has the right dynamics for it. You need the Fed to backpedal. You need growth to kind of stall economic growth. We're already seeing how susceptible the market is. I mean, when we were doing this video, they started capturing news on the Delta variant. All of a sudden, travel leisure stocks sell off. The Dow Jones sells off. Russell sells off. S&P is flat because of its tech holdings, and they go back into tech. So it's very easy to see what they're doing and why they're doing it, what narrative they're gripping on. And I believe that narrative can play out into the end of the year, and that's where we can see gold futures continue to gather some steam. We need those big players like India to roll into some gold, though, and I think that would get it going.